are always looking to take out your stop loss. Okay, so how do you actually align yourself at the the right side? How do you align their interest with your interest? Okay, I think that comes from identifying the change of hands area. I like to call it change of hands, meaning where institutions are accumulating their position and retail traders are actually exiting their position. That's called the change of hands. Okay, maybe I'll just write it out. I like to call this change of hands. It's when retail traders are exiting and institutional traders are getting in. Okay, so it could be the form of the retail traders are being stopped out of a position, and the institutional traders are using that to buy to accumulate their position, right? And after the retail trader has really lost the money. Okay, so they do this, be it in a bullish market or in a bearish market. So in today's video, I'm going to share with you how do you find these levels. Okay, number one, you need to be aware that this is happening. Okay, that's the most important. Number one, you need to understand what's happening. And number two, you need to identify. Okay, so step one, I already explained to you, this is a situation when it comes to trading, right? The zero-sum game, right? You need to be cautious that the institutional players as well as the brokers want to secure out. Okay, for brokers wise, most of the time they do something known as something called a B book. B book means that they're actually betting against you. So every dollar you lose is a dollar of profit for them. Okay, so let's go into how do you identify this change of hands. Okay, so right now I have a chart over here. This is a pound franc, you can see over here. Okay, and we are on the H4 time frame. Okay, so I think a good question to ask yourself when you're trying to identify this change of hand is where does the average Joe put their stop loss? Okay, that's a very powerful question. So let me write it down for you. Where does the average Joe put their stop loss? Okay, if you are a new trader or you're still struggling, then this is the perfect question to ask yourself. Where do I normally put my stop loss? Okay, because chances are that where you put your stop loss is where those kind of normal so-called gurus or textbook or books that you read, they tell you to put the stop loss below the swing low, put the stop loss above the swing high. Okay, that by the way is not the best advice. Okay, I'll explain more later. So ask yourself, where did the average Joe put their stop loss? Okay, so let's look at this right here. Okay, now market, it's I mean, we're in an uptrend for sure. Okay, you have a swing high, swing low, swing high, swing low. Price just did this big bullish movement up. Okay, so what do you do? Or what does the textbook say? Oh, they say, oh, okay, so you identify that there is some support over here. You look for engulfing pattern. You look for candlestick pattern that show signs of strength. So you say, oh, okay, so based on the textbook, I should be buying. So you buy over here. Okay, let me just mark it here. Then what happens? Price barely even moves a direction. In fact, you sold, you bought at the top, sorry, and price goes down to whip you out. Look at this doji. Look at this here, how dirty the market is. Okay, so price goes back down before it starts rallying. Okay, so you see this pattern. This is actually where most this section over here is where most retail traders like you and I will put your stop loss, right? You put your stop loss here, and what happens is that price will go just to take you out, right? Just to make sure you lose the money, right? And then start rallying. Okay, so it's not that you got the direction wrong, but rather you got the entry wrong and you got the stop loss wrong. Okay, it's okay to have a bad entry because you can always compensate your bad entry by having a wider stop, right? Let's say you're new to trading, you're not too accurate, you can't identify levels properly, you can lower your position size and use a bigger stop loss. That's no problem. Okay, but if you put your stop loss wrongly, for example, if you put your stop loss at this level here rather than maybe a bit further below, you would have lost money instead of making money. Okay, so this is where the change of hands happen. Okay, so ask yourself this question: where does the average Joe put their stop loss? Okay, where do they put their stop loss? Okay, so that's the first example I have for you. Okay, I'm going to go through more examples so that you understand. Okay, so over here, let's look at let me just delete the moving average first. Okay, let's look at price over here. Okay, so over here is a swing low, this level over here. Okay, so depending on how you draw it, you take the extreme low or you take the candle. Personally, I would draw it like this because you can you see that there's one touch here, there's another touch here. It fits nicely, right? So I will put my support line as over here. So what did price do? Okay, if you bought on here, you say, oh, this is kind of like a piercing candle, right? It's, we're uptrend, we should be buying, right? Textbook says that of a support, I buy. And you buy over here. Okay, your entry is here. Where do you put your stop loss? Probably below here, because that's what you were taught. Okay, don't get me wrong, right? This is what most people are teaching. Okay, this is what textbooks are teaching. Okay, it's not your fault. You must understand this. Okay, it's not your fault that you are getting stop out, right? It's you are being taught wrongly. Okay, so hopefully this video will clear up the air for you. Right, I'll give you some clarity about how to put your stop loss. Right, how do you make use of this winning trading formula to align yourself with the institutions? Okay, so let's say you bought here, you put stop loss here. Check this out. What happens over here? Just check this out over here. You have another doji that probably stop you out. Okay, you probably got wiped out again, right? Second time, right? And are you frustrated? Of course you are, because you probably got the direction right. I mean, if you look at this structure, it's still uptrend, right? Probably price will still carry on to go up. Okay, but because your entry is wrong, okay, your stop loss is wrong, and that is why you are losing money. Okay, so if there's one thing that you need to know is that your stop loss is very important. Okay, always make sure you use a stop loss, number one. Okay, that goes without saying. Number two, control your risk, right? Don't trade so big if your stop loss is wide. And number three, use a wider stop loss if you are still new to trading. Okay, I mean, it only makes sense, right? If you are new, you're probably not so accurate, right? You're not experienced, you cannot make good decisions, you cannot analyze the charts properly, and that's why you want to use a wider stop. Okay, when you get more experience and you are profitable, then you can experiment tightening your stops, right? For me personally, I like to tighten my stops. I like to have a very small stop loss because it can give me a huge reward to risk ratio, which is something that I like. I don't feel happy when I risk 30 pips, I make 30 pips. That doesn't excite me. Okay, what excites me is I risk 30 pips and I make 300 pips. Okay, that's my personality. I'm not saying that it has to be for you, but I'm saying that if you're still new, then you want to widen your stop loss. Okay, so let me give you okay, over here, let me give you an example over here. Okay, so you can see that this pattern happens over and over and over again. Okay, so what you can do is after the pattern has occurred, you can trade in that direction. Okay, so let me explain. So over here, right, you have a support bounce up, breaks, retest somewhere here. Okay, retested. Okay, so logically you would expect that price breaks above, it would be supported before it goes up. Okay, that's a normal expectation. Okay, so if you buy, let's say you buy on this candle and you put your stop loss below, right? That's a pretty normal play. Okay, that's pretty textbook style trading. Okay, and you should know that textbook style trading won't make you money. Okay, so what happens after that? Price just start selling down. Okay, so this pattern always happens, right? It involves identifying a known level, waiting for the fake out of the level. When price closes below this, you can enter over here. Okay, you can enter on this candle here. Let me just draw it for you. Okay, you can enter on this candle, put your stop loss above. Okay, that's how you actually align yourself with the institutional traders. Okay, and if you have been our Telegram channel for some time, okay, if you are not, please join. It's free. The link is in the description. Okay, if you've been in our Telegram channel, you will know that we always call this the concept of whipsaw Wednesday. Okay, this tends to happen on Wednesday. Okay, not always, not 100% of the time, but the idea of this institutional pattern playing out generally always happens on Wednesday. Okay, Wednesday during the US session. Okay, that's where it tends to always happen. Okay, you can just observe it. Maybe the next 3 weeks, observe it every Wednesday. Depending on the time zone you are, look at the US market. See that the euro the euro trading zone will trade one direction. For example, it trades up like this, and the US session starts selling down. Okay, this always happen. Okay, in fact, if you just master this one trading pattern, just this one, okay, just this one, and you do it every single week, you should be profitable. Okay, but of course it takes skills to identify it. Anything in trading, whatever strategy you do, it takes skill. Okay, so this is the strategy. Okay, we have another strategy that we teach in our free day trading guide. Okay, the link is in the description. Okay, it's a free PDF. Make sure you download it if you have not. Okay, that is actually a more beginner friendly strategy that we have for you. Okay, rationale is because that trading strategy is using the daily time frame. Okay, so when it comes to trading the daily time frame, the picture is clearer. It's easier to make a decision, right? You don't really over trade, and you have the clarity of mind. Okay, just imagine every morning you wake up, right? Just start your morning, spend 15 minutes, right? Just 15 minutes every day. Look at the chart in the morning, execute, right? While your mind is still fresh. Okay, when your mind is still capable of making a good decision, right? You for example, you make a decision to short here and you just close the chart. There's no emotions involved. Okay, but when you do day trading, for example, like the strategy I shared earlier on, right? You do a day trading, and the market moves. You have the euro session. Sometimes the euro session is bullish, then the US session is bearish, then the next day the Asia session is bullish again. You get very frustrated because there's no movement, and then you let your emotions come up, right? And when you're emotional, you're going to make stupid decisions. You're going to lose money. You're going to overtrade, right? And that's why most people blow their account. And that's not something I want for you. So if you're new to trading, make sure you download that copy. Okay, it's free. It's step by step. It covers more than just the strategy. It talks about candlestick. Make sure you get it. Okay. So I think before I end off this video, I'm going to recap one more time. Okay. How do you trade this winning forex formula? Okay. How do you beat the forex makers, right? Brokers and institutional traders? You identify the change of hands, right? Ask yourself, where does the average Joe put their stop loss, and don't put your stop loss over there. Okay, look at these places as entry points. Okay, but make sure you complete your entire analysis with, for example, market structure, trend, support and resistance level, right? Because if, let's say, you do it, for example, this chart over here, you do you sell, you say, oh, this is where people will put their stop loss above this swing high, and I sell here. But you're in the uptrend. Okay, you're going to lose money. You can see over here that this is probably a trade that would have lost you money if that's what you did. Okay, so that's not something you want to do. You want to understand that this formula is not the magic pill on its own, but it's an understanding of how the market works, but it's not the entire trading formula. Okay, we teach you the entire trading course that we have. Is totally free. Check the description below. It's totally free. Just check it out, right? How to open an account and get your bonuses is all over there. Okay, so that's it for this video. If you like this video, you have any comments, any questions, just comment down below. Okay, we release videos almost every day nowadays because we are currently in the lockdown period, so there's a lot of time, so we record these videos to serve you better. Okay, so make sure you subscribe to our channel, and we'll see you in the next video.